Yo, what's up, boys? What a fucking banger day on, well, really all markets, really. Specifically, gold and indices. They're essentially the same thing, right? They, on the higher time frame, just bearish, or overall bearish. We have the strong liquidity down here. Fair to manipulate relevant low. Over here is even better because price expands on Friday, and we have an inside bar on Monday. So we know this is our tracement, right? Because price expands but falls short of a relevant low. That engineers the liquidity, right? Uh, so this is fucking like when I tell you this is so perfect, right? Two stages into the highs. Remember that two-stage PSP on YM on Friday, right here. We expand away, right? We expand with that shit, but fall short of a low, right? Once you trace from that, this draw liquidity automatically becomes extremely high probable, right? So we're looking for weekly C3. Right, this is when you can anticipate the weekly candle is when the previous week does something, right? So clearly you have a weekly swing point here. This C2 candle expands very rapidly. You see this little volume imbalance inversion here. Maybe you want to use this CSD. We want to get a little bit more precise than that. That's where we use gaps. Like you look for a key level within the previous week's range. And that has to be created on Monday because we don't, when we open the week up, we don't have a daily key level, right? So it's really ideal that Monday consolidates or retraces after expansion and creates that key level, which is what we do on both assets. So you're gonna see this asset mainly retraces here while gold consolidates. These are both continuous signatures. Uh, and we want to continue higher time from continuations from gaps, right? Now look at the low of the week at this point. And this is where I really should have held this trade, honestly. It's 1800, guys, is a low of the week. Like, dude, it can't get any more obvious that we're bearish. Like, it really can't. This is extremely obvious that this is going to be a bearish week. Uh, yeah, it's perfect, right? And if you look more of the daily profile, right? We're expanding higher first as well. It's really perfect. What else was I going to say? Oh, yeah. So, this daily gap, right? We want to use for higher temper continuation. So a lot of people were concerned with this close proximity SMT. Well, if you were a student of mine for a while, then you should know when this is totally disregarded, right? And that is when the higher low on the mid time frame is a higher time frame gap, right? That is totally disregarded. You're never really going to form an advanced premium discount with an SMT fill. Like, when do you ever see that? It always looks like this, no? It always looks like this with an SMT fill, generally. Right? So that's the only time we ever disregard it. I've mentioned this before. Um, so that's, if you didn't know that, now you know. Uh, so we have this, right? And if you watch my decoupling stream, this is perfect, perfectly played out. The asset that manipulated prior to 930 expands lower, right? So it's showing strength because it hit this high before, as you can see, like at 9 o'clock. But then it starts to expand away at 930. So this asset starts going lower at 930, while the asset that was lagging goes higher, right? And this is without knowing just a bias or without knowing that this is a gap or whatnot, you might think that this is an SMT break to go higher, right? But that is totally like false. That is totally a mistake, right? Because we want this SMT to send price lower, right? If our draw liquidity is lower, we want a key level to send price lower, right? We want a key level to cap off this trace to go lower. Where is that key level? The previous is high. It's this high right here, dude. We don't want to see SMT break there. That's totally out of the picture, right? And this is where filtering comes in. It's like narrative, right? It's not just concepts, it's narrative. Like this is where you apply the concepts to is narrative, right? So I tell you this takes a long time to learn and stuff like that. That's what I mean, like experience, right? And understanding narrative, like that shit you just can't learn overnight. It's really hard. So this is just when you do not want to see this SMT break. We don't want to see that, especially because look at the opposing side of this, right? Are we coming off of a reversal? Fuck no, right? When did we want to see SMT break, guys? It's after. Whoops, let me draw this. It's after a reversal, dude. You coming off a reversal from a key level, you have a draw liquidity on both assets, right? And if both assets reverse, then you trade asset sync, bro. Whoops. Like, see this close proximity SMT? That's when you want the SMT to break, dude. Right? So if you didn't know that, now you know. Yeah. So we get that nice C2 closure here. So the reason why I'm waiting for 10 o'clock is not necessarily because of this large wick, right? It's because you got to wait for the 2-stage, right? And the 2-stage is the PSP, the PSP close, ideally, right? So that PSP closure is that strength switch, right? So when you wait for C3, that's 10 o'clock. So naturally, it just plays out that way, waiting for the 6 a.m. close. Because we know we can fade any candle, right? You can fade any wick size, really. It's all about stop loss placement and where you're applying that C2 candle, that reversal candle. What are the requirements of trading a reversal candle? Key level, SMT, right? So a lot of people are saying this 90-minute is large wick. That's like, it's discretionary, man. Because when you really look at it, it's not that bad, dude. Over here as well, like it's discretionary, right? It's pretty large. I'm not saying it's small, but right, it's totally what's the word? It's not what's the word, bro? I can't think. It's subjective. Yeah, it's subjective. It's kind of hard to tell. But I already told you guys like what's the mechanical way to fade it. Ideally, it's from a high low day, hits relevant key level, SMT. So that this is how we actually anticipate reversal candle to form, right? Because we're basically when we trade a reversal candle, we're basically anticipating it to form a reversal candle, and then we're not really anticipating it to expand necessarily, but we're anticipating it to reverse and then the next candle to expand or whatnot. We're not anticipating it to come back all the way up here and whatever because it's the reversal, right? So, especially when you're trading a reversal candle and on the lower time frame, what's formed the higher the reversal candle is like a strike switch PSP, like or just a really high probable reversal, whatever, like it's totally fine, right? So, and it's all about where you put your stop loss placement, right? I talk about ideally you take the opening price of that candle, you mark an EQ of it, and ideally put your stop loss way up here around EQ or something. I did not do that. I did not put it way up here. I did not think that was necessary, dude. Like way up there. I'll show you where I put it. So price expands lower, and by this time we are trading C3, like I said. Oops, 3-minute. Very nice V shape. Really, really nice. We engage this low, and then we consolidate. You guys see this consolidation? This is a continuous signature. This is really clean, right? Now the high of this consolidation is printed from this gap here on ES. I see this ES right here. So this is why I entered on when we close through right here. Right, but I did not put my stop loss here because it's still a consolidation. I put it more so like up here. This is where I put it, dude. Kind of just around like this breaker block or whatever. I don't know like necessarily like why I put it here. I just do, bro. Like when I see like this, when I take this range here, what do we not want to see? We do not want to see deep retracement, right? It's an EQ. That's ideally not want to see. I don't really think it was necessary to cover the whole gap. I guess this little inversion. I don't know, dude. I just put it there, dude. I don't know why. I just did it. You could maybe put it at this high here, like the breaker high. I put it there. I thought that was a good enough space, bro. And yeah, there's no need to like put your stop loss really small, just get wicked out or nothing like that. Just put it in a relevant area as long as you get enough RR to the low. This is 4.2R. Dude, you're good, right? You don't need to force shit, stuff like that. So yeah, man, this is a good stop placement in my opinion, right? It's above 50%. That's really all I care about. Yeah, bro. That was really it. And we absolutely fucking melted. And like I said, I really should have held this, man. Honestly, I don't know why I didn't. I think the main reason is because I went in with one contract. So it's like, do I really want to give back 4R, like just in case? I can't partial, so it's like, fuck, it's hard, Because the next draw liquidity is so far away. Like, look at this shit. It's really far away, bro. It really is. So I decided, like, I'll just take my trade there. It's totally fine. If you partial, it's like totally cool. But it's definitely valid to hold this shit. Like, definitely valid. Especially gonna look at YM, dude. Like, look at YM, bro. It still has like this open draw that's a lot closer. So that's a mistake, to be fair, by me, probably. But again, I'm not really tripping. This is pretty decent too. 2 stages some T-fill right here on the lagging asset. And notice how it's really high in premium. It's like there's no reason to return this level. Why? Because it's in premium, right? This is where we would have to continue from, right? So I'm not really concerned if this is like a 30-minute gap or some shit like that. Yeah, you see this, like, it would be a 30-minute gap up here. Dude, it shouldn't be returning here, right? It should not be returning to this level because it's printed high in the range. This asset hadn't taken anything out, right? So that would be totally fine, in my opinion, to take this. So this is valid. I'll show you what UV took as well. This, in my opinion, is valid for lagging asset. I was in gold though. I wasn't really watching YM. But yeah, this is when we want SMT break, guys. What is it coming off of? 2 stages SMT at key levels. So this is what we treat as asset sync, not here to break this SMT. So that's the main lesson for today, really, right? And this is beautiful as well right here. So it's really the same thing, right? This is the protected level. So you draw it from here to here. Still haven't reached a draw liquidity, so we should continue. We retrace into above EQ, so this is where we should continue, right? Notice how this asset takes out some lows, consolidates, does not take out this high, does not take out the high, and then closes bullish, right? This asset closes bearish. There's your shortish PSP. Sorry, I'm sick, so I think I have COVID, dude, because I can't taste shit. But yeah, I think I have COVID. But this is valid. This is what he took. Really good trade. Whether you take it here to get 2R or you get the retests. Me personally, I'll just mark execute. I don't care. At least if it's 2R. And yeah, bro. Really great day. Like, this is fucking perfection, man. This is just like teach state, bro. Yeah, really good shit. Really good shit. So that was today, guys. Absolute perfection. Very good stuff. So hopefully you guys learned something. I think there's some good lessons up in here. Should have held it, but I'm not too mad, man. I won't bitch about it. Don't be too greedy, right? But yeah, there's some lessons in that to learn from. And yeah, hopefully you learn something, and yeah, hopefully you guys have a good day. Catch you later.